Good morning, guys. Chris Abbott here, broker sales rep with Keller Williams Signature in Oakville. And it wasn't long ago, guys, that I had posted a video about CMHC, which is the Canada Mortgage and Housing Corporation. Basically, a crown corporation that's mandate is to oversee the protection of Canadians and help them facilitate insured mortgages. So if you've got a 20% or less down payment, they backstop your mortgage loan to the banks to ensure that they're protected, and they do it with taxpayer money. Now they're set out to designed to basically make sure that there's a good, healthy housing environment, and they're also a de facto voice in the marketplace to help dictate policy and set the tone in the market for where the housing market will go, and to sometimes tap the brakes on it. As we all know, right now we're in an extremely high-priced market environment, and there's multiple offers, and prices have gone off the scale. So I'll give you an example. In my last video last year, CMHC CEO basically said that the market was going to have a massive dip, and that home buyers should sideline themselves and wait until things got a little bit better before making a house purchasing decision. Well, he completely missed the mark, and what ended up happening was you would have seen a 34% increase between what he said it would go to and what it actually ended up doing in terms of real numbers. So those home buyers who took that advice from CMHC, who had created its own little echo chamber to have their voice reinforced in the market, actually caused people to lose opportunity and put them in a position now where they're faced with an extremely high increase in housing prices. So just crazy, right? Maybe the intentions are there, but the results and the reality are way off the mark. And I'll tell you what happens, and this is how things go. Last summer, they had a 49% market share with their competitors trailing, obviously. So they were the dominant voice in the market. People took direction from CMHC. This is a corporation that was started by the Crown back in 1946 to help returning war veterans get into housing and get people up and rolling and help the economy and get stability and have home ownership and all those good things. So the original intentions of the CMHC were excellent. As times evolved and today's current times, we've seen them morph into somewhat of a social justice warrior out there. And in doing that, policy doesn't always go with ideology in terms of the realities of how the market works, as we've seen time and time again. So in short, CMHC system is one where gains are privatized, but the risks are socialized. And what I mean by that is you have that maybe the have-nots and a whole bunch of people, the taxpayers out there who are helping backstop the banks who are already extremely wealthy, ensuring that they get paid in full, guaranteed by the government with taxpayer subsidies funding, for people who want to buy a house. So while they talk about housing affordability and they talk about home ownership for everybody, the reality just isn't so. And in fact, they've actually harmed people with providing inaccurate advice and poor direction. So I just wanted to share some numbers with you. So the total housing debt right now in the Canadian marketplace is $2 trillion. Okay, that's our housing debt. I don't have to tell you that the housing price points have gone like this, and the median income has gone like that. There's been a very little, if any, kind of increase in wages. And if anything, in this past year and a half, we've seen a massive hit on the services industry, the travel and tourism industry, the oil and gas industry. People have actually had to take out debts and loans and try to sustain their years-long businesses with government-funded debt. So instead of backstopping business owners who have a tried and true track record, what the government's basically done is handed them a rope and said, here's some more rope for you guys. We're going to give you more debt just to keep things going. And if you fail at the end of the day, you're obligated to pay that back. And there's no guarantee for you. Yet the banks are going to get guarantees on their loans. So what this has actually done is it's incented, encouraged, and motivated banks to go out and make these big loans on properties, roll the dice on risks, because they get guaranteed money. They have no exposure to risk whatsoever. Also, there's been some monetary issues in terms of the borrowing costs. We all know it's a historically low time to borrow money. Money's cheap right now. and returns are not there. So putting your money in savings or other investments into real estate has been a winner right now, because you can cash flow it, refinance it tax-free, you can leverage it, you can force appreciate it. So many different ways to accumulate wealth through real estate. It just seems to be the way to go right now. And again, these policies are underwriting that type of a market environment. So you got bad policy, bad data, taxpayers underwriting, paying off that debt. This year alone, I've just made some notes here to put this in perspective. $18 billion was added in April of this year alone to the debt for housing. Okay, so these are people who've gone out and they've borrowed massive amounts of money to finance a home. And what I find interesting is it's important to note is that people don't look at the principal amount borrowed to fund their purchase anymore. They essentially look at a payment. They're buying a payment. And when they do that, they don't anticipate future increased costs or decrease in market value, for one. So when it comes time to refinance and you see that they didn't get that capital appreciation or the gain in price on their home that they had anticipated, that's one hit against them. Two, you've got a situation where if the mortgage rates go up, the interest rates go up, which they will and they must, and inflation, let's not discount that, then what you're going to see is people who cannot carry their property, because you're going to see maybe a 1 or 2% increase jump in the borrowing costs. That's going to have a substantial impact on your financing. I can't see a day, and I've said this for a very long time, where the government of the day and its altruistic, wants and causes will come for those people who have sacrificed and fought hard to get into home ownership. I'm not discounting those who are trying to get into home ownership. I understand the struggle. I've been there way back when I started. I can fully appreciate that, not only from my own perspective, but from my clients. But I also think it's wrong for the government to come forward and start taxing people on the capital gains or the increase in value of their homes, because they did all the right things and perhaps are sacrificing a lot of other things that other people haven't done or don't do. It's a real touchy subject. It is the last tax shelter vehicle in Canada. That's substantial. And I think removing that would be a big mistake on behalf of the government. We haven't quite gotten there. Trudeau has mentioned that. There have been some conversations about it, but we're not there yet. I do suspect at some point in time we will see that, because they're going to need to feed into this machine. The problem as I see it, is you've got a crown corporation who has heavily relied on its market share, which was 49% coming into things last year. And after misdirections, miscues, they've now dropped to 23%. So they no longer wield the influence and power they once did. And again, this is up against privatized companies who are underwriting and protecting lenders from loans. So it might be time. And my question to you today is, the CMHC really doing an effective job? They've switched out their CEO, Evan Siddall, and they've replaced him. It's time for a rebrand, a redirect, and a revisitation on maybe some of the policies that they're doing. As we all know, when you widen the scope of what your core mandates are, you can lose your focus, and in doing so, lose your direction. And I think clearly the CMHC has done that now, and they either need to course correct and severely and swiftly, and actually realize what is going on in the market instead of using an ideology to try and drive it, or they're going to get washed away and become an insignificant player out there and replaced, and quite rapidly, I might add. So it's been an interesting time. It's been a year and a half of volatility and trials and tribulations. The market's going to continue to change out there. So if you do have questions and you want to strategize effectively about what your real estate plan looks like, reach out to me anytime. I'm happy to have a conversation. I have to live and breathe all this stuff. It's what I do, and helping my clients is what I do. So any questions, feel free to ask. There are no silly questions. So by all means, I'm happy to have any kind of conversation about your situation, and hope to talk to you soon. Have an awesome day. Have an awesome week. I'd be interested in hearing your comments and feedback, and I will be online again soon with another update. Okay. Have a